This morning we're going to be looking at dollar yen, but I briefly want to talk about the dollar index. Now, we'd formed a descending triangle pattern. We broke out of that pattern in late trade Wednesday last week. Thursday we consolidated and retested the breakout level, and then Friday we had better than expected non-farm payroll figures, and we saw an aggressive move to the upside in the dollar index. Now, yesterday we've consolidated again. This looks like a corrective channel formation. We are looking for dips in the dollar to find buyers. The measured move target for the dollar index is here, which is 93.95, which is the start of this wedge formation. So like I said, scope for mild dollar selling today, but we're looking to buy into those dips. Now, reflecting that back into dollar yen, breaking down the time frames, the monthly chart, we've got Marubozu support from November last year at 109.63. We've got the potential to be forming a bullish reverse head and shoulders pattern. So this being the left shoulder, this being the head, and this being the right shoulder. We'd need a break up here at the neckline to confirm that formation. But at the moment, the bias is still mildly to the upside. If we break down to a daily chart, here we can see the last count to the upside in 5 waves, a bullish Elliott wave count. We've then seen a corrective formation lower, and then we've seen this prolonged period of consolidation, and that is either forming a symmetrical triangle pattern or an ascending triangle. And obviously the ascending triangle has a bias to break to the upside. Now, Friday's price action posted a bullish outside day. That sometimes highlights the end of a trend and the start of a move to the upside. Now, just breaking down to a shorter time frame again, this is the 2-hour chart. Here we can see a bearish count to the downside, and then this strong move on Friday, and then this period of consolidation yesterday. Now, the 30-minute chart shows again another bullish Elliott wave count, and then a period of consolidation. Now, we could be forming a reverse head and shoulders pattern. So again, this being the left shoulder, or possibly this being the left shoulder, this being the head, and then moves lower today, expected to find buyers either close to this 50% level and this trendline confluence area, or here at this extended trend support. So we're actually going to be looking at fading a trade in dollar yen today. So we've got 2 buy levels. So we're going to look at buying dollar yen at 110.40 and at 110.15. The stop can be placed at 109.75. The first target is our bespoke resistance at 112.10. If we get a break there, then we'd look for this previous resistance level at 114.30.